Good afternoon and welcome everyone to the Uncensored live Q&A session. My name is Danny and I will give you the webinar today. It seems like everything works properly and we can finally hit the road, and we are going to begin, as I said, with the questions that we received. The first question that we see here is, what is AvaProtect? So let's go onto the website. We're going to use the platform embedded in the website, which is called the Web Trader. We're going to click here on sell or buy just to open the sidebar, and we can see AvaProtect is displayed here with the golden shield, and at the bottom here with a box that we can mark. We're going to click here on the icon at the top to reset back to the default screen. Here we're going to click on the two arrows to fold it down, and in here we can either search it and select from the list, search it manually in here, or type what we're looking for in here. Now, since AvaProtect only works for, let's get ourselves somewhere for the notes. Okay, and we're gonna write here AvaProtect, and of course, we're going to have the question at the displayed. There we go. We're gonna take the question, what is AvaProtect? It's the right one, and we're gonna place right here. So we've got, what is AvaProtect? First of all, so for you guys to know, as you can see, when I'm choosing an asset and clicking buy or sell, it will be displayed here to the right, the order entry. But you should know that AvaProtect can only be used via the web trader or the AvaTrade's trading app. You cannot use this with MT4 or MT5. You will probably notice when clicking buy or sell, you will see that there is no golden shield on those platforms. And one more thing to know, that AvaProtect can only be used for gold, silver, and Forex. In this case, we understand that to demonstrate the functionality of this product, we need to select one of either gold, silver, or Forex. In this case, we're going to click here on the search symbol, and we're going to simply look for gold, maybe, just like that, and select it from the list. Then we're going to click on the two arrows to expand the screen and see it more nicely. We're going to click on the arrow here to fold down the list and clear drawing. And in this case, with this golden shield in mind, we're just going to click it to enable the product. And what this product does is very simple. AvaProtect allows you to protect the position for a certain time frame. Whatever you lost during that coverage will be returned, and there is a fee when we are using the product. Okay, there is a fee when and for using the product. That means that I can just as easily click on the golden shield again and unselect the box here, and then the product is not going to be used and no fee will be paid. The fee displayed in here. Okay, but just a moment. What this product is even doing, it allows you to protect the position for a certain time frame. Okay, protect it from what? Protect it if it goes against us. Meaning that in a buy scenario, when our intention is that the value will increase, and the further it increases from the current price, we're going to make profits. If it goes the other way around, for every value that it decreases, it just doesn't want to stay. Okay, we'll paint this in green. So this is for a buy scenario, and a sell scenario would be the other way around. Now, with this in mind, if it goes further down, we're going to have losses. So first of all, we're going to customize the lot size to 0.01, which we can always increase. And we can also extend the length of our coverage, which can see here, we can see here that the expiry is displayed. And if we click here on the plus, we will notice that the fee here, this is what we're going to pay to cover gold with 0.01 for 1 hour. So let's click on the plus here to extend the duration. Now for 3 hours, it's 13.48. For 6, it's 14. 1 day is a bit more, and 2 days it's a bit more. You can see that this is not a linear change, so just keep using the product to know the changes. One more thing that has an impact on how big or small the fee can be is just if we extend the number of units. So if the lot size is bigger, that means that the fee is going to get bigger as well. Watch that if I click here on the plus, it increases and increases, okay, which will have a different impact on our profit or loss. In other words, we'll click here on the take profit and we'll click here on the stop loss to enable both pending automatic orders. What take profit does is very quickly closes the position automatically when reaching the value set. And what stop loss does is exactly the other way around. So if we're going to look at the price we've got at the moment, which is 3341, and we'll extend it to 3371 as an example, which is $30 higher. So we will have, and also we'll paste the green line just where we've placed the take profit. That still doesn't allow us. Oh, we're looking at weeks. Let's change to days. That makes a lot more sense. Okay, and with days, we can also minimize those nice rectangles we've got here. So that's 1, and that is 2. And then we can extend and extend, and that looks much better. So we've got a first pending order, which is the take profit that's supposed to close the position automatically with a profit. And now we're going to set the take profit. Maybe we'll choose a little higher price. Maybe we'll make it flat 50 from the entry. So entry is 3341. Let's make it 3391. And then we can simply extend that to 3391 as well. And as well, click here on the rectangle and make it a little nicer. There we go. Of course, this is just to convey how the product works with no analysis specifications, purely to show you guys how the product works. And in this case, so we've got, we're gonna adjust that as well to 3291, 3291, very good. And now we've got both edges for the take profit and for the stop loss. Okay, well, let's keep it like this. And now we can see that we can potentially make 247, potentially lose 250, and our fee that will be paid is 138. Not bad of a comparison. For comparing the profit to the loss and to the fee, I would say it's reasonable. Not the best, but reasonable. Of course, if we will reduce the length of the coverage, the fee will decrease as well. However, keep in mind that if I keep the original take profit that we wanted with $30 away, which was this, then what happens is 71. What happens is we can potentially make 147, but the fee is almost as much as we can make. So what's the point using the product? The product here, guys, is assisting us, allowing us to protect the position for a certain time frame, and whatever we've lost, we're going to get back. Keep in mind that this is the only partial time that the position was covered. And if we choose to carry on with the position even after the 2 days, we see the expiry is right here. Yeah, expiry is right here. But if we are covered for 2 days, but maybe we kept it for a week, as an example, so we won't get the losses we lost after the coverage ends. Only what we've got during the coverage itself. Keep that in mind. Other than that, it's quite self-explanatory. There's really no much to say. Also, I would like to say that you cannot extend the coverage. There is no way to recover a position, re-protect a position. What you need to do is you need to create a new one. There is nothing preventing you from protecting another position if you want. Okay, so we cannot extend, but we can make a new one. Yeah, we're gonna take the notes we have here, simply paste it down here, and we've got a nice answer. Maybe make it a bit smaller to better fit to the presentation. Something here doesn't really, oh, we've got numbers on those too. Maybe we can just get rid of that. Perfect. And as well, great. All right. The second question is, how can I confirm that my account has enough balance for my strategy? Okay, so we're going to click in here, select everything, click and paste it right here. And what this question is actually asking is very interesting. It's very interesting because in other webinars, we show that we have the margin capability to take a position, but we don't speak about having enough balance for the strategy. I'm not a big fan of the word balance, since balance doesn't reflect the lifetime changes that that's something that the equity does. But let's maybe rephrase. Can I confirm that my account has enough maybe margin, has enough, let's go with money, has enough money, because the balance again doesn't change unless we close the positions. You know what, let's not rephrase, since I think we can make it like this. So let's use gold as an example. Click here, we don't need that now. We're going to click on the lot size, change it to 0.01, and pay attention to one important thing that is called a margin impact. We're also going to write down the name of the instrument we work with. Maybe we should have done it since we worked with AvaProtect, but never mind. The lot size here is 0.01, which stands for 1 unit. How so? Because if we place here at the lot size 1, we can see that 1 lot equals to 100 units. Therefore, 10% of that is 10, and 10% of it is 1. Therefore, 0.01, which stands with which is 1% out of the whole lot, is just 1. In this case, we've got 1 unit. The price per unit is 3,342. So we're going to write here price per unit. And then under price per unit, we have the number of units. So in this case, it's 1 number of units. Okay, now underneath, we're going to write the value. And we can see that the value for this position is the same as the price per unit. How so? Well, because we've got only 1 unit, there is no need to multiply anything. But we're going to write here the equation, price per unit times number of units equals value. And then we're going to go, I will explain about it in a moment. Value divided by leverage equals margin impact. Fabulous. And we're going to have a look at the leverage here. That's 1 to 20. Okay, so what the leverage, just a second. What is the leverage doing? The leverage multiplies buying and selling. Okay, in this case, because we're multiplied by 20, that means that I can basically look at the value and I'll need 5% of the value as my margin impact. But an easier method to know that is just to divide the value by the leverage. So we're going to go 3,340. We started with 2 divided by 20, and we've got it right here. Of course, for people who are using the web trader, it's done for you automatically. People who are using MT4 and MT5, this is a useful equation. We've got here, and then we've got this equation, which, as we said, we're simply going to divide the value by the leverage. Very nice. Excellent. But is this enough for a strategy? No, that's enough for one position. So how can we ensure that we have enough for a strategy? Well, same way that we did now with gold. So let's mark it as number 1. So this is position 1, right? Right, so we have several positions. So this will be the necessary amount. Okay, and then we can just do this and maybe do it again. And now we have 3 positions that we can compose differently. Maybe the second one will be silver. The third one will be maybe NASDAQ as an example. Then we're going to change the number here. We're going to change the number here. And leverage also, and the number here and in here. Then we can just take that and work with a clean template, bring it back to silver. All right, in the same way that we did the exercise to know the necessary margin to open 0.01 with gold, we can look at silver and do the same thing. So we're going to click here on the name, erase what we've got here, place silver, select it from the list. Again, we're going to click buy or sell to enable the right menu here. And we're going to bring it down to 0.01. This time we got a different leverage, we got a different value per unit, and that is just perfect for us. Let's work with the numbers we've got here. So the value per ounce for silver is $32. So we're going to write here price per unit is $32. Number of units is 100. How so? Because the same exact exercise, if we place here 1 and 1 is 100%, that means that this is 10,000. So 10% of that is 1,000, and 10% of that is just 0.01, which stands for 100. And now with this 100 in mind, we're going to write it right here. And we're going to write the leverage here, which the leverage is 1 to 10 this time. And we've got 100 units. So let's do 100 times 32, which is already displayed in here. We're missing here something. Okay, so we've got 3,240. I think that one is not really okay. Yeah, by the number of units is, sorry, by the leverage is 10. Okay, great. So we're gonna do 3,240 divided by 10, which is the leverage. For this particular position, we need 342. So far, we've got 167 for gold and 324 for silver. And now for NASDAQ, we're going to do the same exact exercise, delete what we have here, place NASDAQ, click in here, and then we're going to click on buy or sell to display the right menu. And in NASDAQ, it's already prepared for us, 0.01. This time leverage of 1 to 20, similarly to gold. And with NASDAQ, the price per unit is 20,222. number of units is in this case it's going to stay 1. So the value which is similar to the value of the per indice will be 20,222. And if we divide it by the leverage, which is 20, it gives us 1,011, which is written right here. Let's just write the leverage here. We're missing the leverage here. Just a second. And the leverage is right here. Oh, sorry, that's 20. All right, so we're going to combine all of those positions, 167, 324, and 1,000. And now we know that if we're only going to trade those 3 positions and we're going to do it with 0.01, so far what we need is 1,000 plus 324 plus 167. So in total, we're going to add them all together. It's also important to understand that I'm only doing this for the sake of the discussion, and there is no risk money management or analysis involved. Meaning that this particular example is only to show you the necessary margin for this 3 positions. Meaning, if I will change either the lot size or I will add more positions, of course, I'll have to include it in my margin comparison, and I need to know if I have enough or not. Furthermore, I need intentionally to leave margin in my account to be able to withstand my strategy if something moves against me. This is why we can use a stop loss to target a certain price on the chart, that if it gets to it, it closes and doesn't proceed going against us, which will increase our loss. I hope that this comparison makes sense. Okay, we're not gonna put all this thing in the presentation because I don't think that it will allow us to do that. That becomes very, very messy. Maybe we'll unify everything like that. Really hope. Oh, actually, we can make it smaller like that. There we go. Now somehow we made it work. All right. How can I confirm I have enough? So this is enough for the positions that we saw. Of course, depending on the different positions you take in and the size of the positions you're taking, you also need to include risk money management to ensure you've got enough margin even if you lose to carry on with the strategy. Just a second. All right, now the next question here is how can I download my report, download the report with all my trades? Well, that's doesn't really something that I need to show on the chart. We're just clicking on a button. So while in the platform, let's see if we can show it to you guys here, but I don't think we took any trades in here. No. Okay. So on MT4 and MT5, what you can do is you can click on your positions, right click on your positions, and then select export and the format. While in the platform, right click on your positions and then select export report, then select the desired format, whether if it's in Excel or whatever else you want, or you can actually another one of our solutions. So this is solution, maybe we'll call it number 2 solution, is the first solution might be to just contact your account manager or customer service, and they will send it to you. All right. The last question we've got today is, what is hybrid strategy? Well, it's also another interesting question. Okay, so let's somehow, I think that this is still useful for us. Just a second. Maybe we'll minimize it a bit like this. Okay, but we need to, no, this is not useful. What hybrid strategy is, this is what I'm familiar with. So we've got scalping, we've got intraday, we've got swing, and we can combine them to create a hybrid strategy. Scalping can be minutes to hours, maybe, not even that. Okay, this will be hours to maybe days up to a week. I don't want to say more than a week, but some people may say otherwise. And here we got weeks, months to years. So basically what this allows me is to have a certain position that will be kept for a long time, another position that will be kept for medium length, and maybe fast-paced positions if I want to quickly scalp. Now, I don't think that scalping is going to really give us anything at the moment, so we're not going to use that in the example. Other than that, we can choose different instruments to diversify. We're going to click on the commodities. We're going to click on the agriculture. We're going to select maybe sugar or maybe soybean. Yeah, looks quite interesting. All right, so we've got this, and we're going to select the layout button to change the layout to 3 charts instead of 1. And then we've got a Dow Jones here. Let's maybe change it and put, we'll put corn instead. And in here, we're going to have I think Nasdaq is not really, doesn't look to, oh, maybe let's go with a stock. So let's go with Tesla maybe. Right. Okay. This is what time frame? 1 minute. We'll change to days. This is also days. This is also days. Days. Excellent. And now we will try and combine those two of the 3 displayed in here. So we've got Tesla, then we've got corn, then we've got soybean. Okay, maybe I've changed the order. And we've got soybean, Tesla, and corn. Maybe again we'll place Tesla last since the US market is still not open. We're just using it as an example. All right, so soybean is an example. Let's click buy. We're looking at days. Maybe we'll look only on that. And yeah, look only on soybean for now. And to better design the position, we can see that it's quite in the middle if we're comparing the previous few days. We do see that it turned around. Yesterday it was bullish, but it went back. And if I'll scroll down a bit, we can also mark those lines to help us understand better where we are at. Maybe just one more. Maybe just one more. And this one. Okay. And what we're going to do now is we will check the levels that will allow us to finish the composition for that. So we're going to bring it down to 0.01, and we're going to click on the take profit and enable the stop loss. This price seems reasonable, but if I'm buying, I'd rather do it a bit lower. So I'm going to target 1025 as my entry price. Oh, sorry. 1025 as my entry price, and the take profit can be a little lower than the resistance, which can be 1050. And also I'm going to take the same length the other way around, so we're looking at 25.50. That's $25 down, so we'll make it 1020. And okay, sorry. There we go. We've bound that. So we'll make it a flat 25. There we go. Now we've got $25 higher, $25 lower, same ratio which we're going to work on. And we've got the profit area and the loss area, which, okay, this one we're going to keep. And this one is the one that's going to move. And we're going to extend our loss area. And we're going to extend our $10.50. So this is where we are at. This will be our entry. Maybe we'll make it a flat 25. Maybe we'll paint it also in turquoise. And in here we've got the take profit. We'll make it a flat 1050, paint it in green. In here also we have the loss area. We're going to move it down a bit, paint it in red. This one is a stop loss, so it can also be red to help emphasize where we can get to with soybean. And this one can be green. Very nice. And we're intending to buy if it goes lower down. And we're looking at 25 and 25 for one unit for soybean. I think it's reasonable to aim and make maybe 5% on that position. So we'll write it down. We've got entry 1025, take profit is 1050, stop loss is 1000. We're also going to confirm it with the ATR. So we're going to write target 5%. That's from 10,000, that's 500. And the time length is 1 day. And then we've got movements, which we will confirm with the ATR. And lastly, we've got a number of units, which we're still missing. So we are very familiar with the equation, target divided by movements equals units. But since we don't know the movements, which is allegedly $25 away, price difference, and then we're going to match it with the ATR, average true range, which we can apply. Click here on indicators, type the filter AVE for average true range, click and drag it to the right. And in here we can select how many candles we wanted to analyze. In this case it's 14, which stands for 2 weeks, since we're looking at days. I think we're going to keep it like this. Click on the arrow, select an a color that doesn't confuse us. Click save, and we've got $10 on average per day, which doesn't match with the price that we've set, because the price that we've set is $25 away, and the average per day is just $10 away. So we're going to write here average true range ATR equals 10 per day and $25 away price difference, difference, which if we're looking at 1 day, it might not be enough, but I believe to 2 to 3 days might be enough. Okay, if it goes, again, if it carries on bullish. So in this case, we are looking at $25 away. We're hoping to make 500. Therefore, we can divide a target by the movements as displayed in here. So let's try that together and go 500 divided by 25 equals, we're going to do it with a calculator here. Okay, and it's 20. So let's put it to the test. Click here on 1, change to 20. We can immediately see that the results are now 500 both sides, but this is not very wise if we want a ratio of 1 to 3 or 1 to 2, because we can make or lose the same amount. In this case, if we're going to keep it like this, let's just keep it like this for now. And we have the primary position, the first position, which can make 500 profit or loss. Both cases, it's going to represent 5% of the balance. In this case, we're looking at the first position. We're going to put lines like that to help us separate it from the others. And then we're going to take the same things we've got in here, and we're going to paste it twice like that. Get rid of the soybean, get rid of the soybean, and pull it up. And that's great. So we've got 3 positions, soybean, corn, and Tesla. For corn, we're gonna keep the target. We're gonna change the time for 1 day. ATR, we're gonna erase it since it's gonna be different. And this will be different as well. The equation doesn't need to be different. We're gonna keep it. The prices will differ, so we're going to delete the value in here, delete the value in here, and then we're going to take that as it is, and we're going to switch it with Tesla. Then we've got a clean slate, and we can work. So we'll switch to corn and do the same exact exercise. When we've got corn, we see corn is quite bearish in the past few days. It's been bearish. If we add a trend channel real quick, we can click here and then place it the way that fits right. And in this case, we can even paint it in red to help us remember it's bearish. And since it's bearish at 450, I think it's not a bad price to sell. So we're gonna, I think there are too many lines in here. Let's just keep the, maybe trend line would be preferable. And then we see that this is almost 8% change. And with 8% change, we can look at the support line a bit farther down. Okay, matches both cases. Let's have an oval to help us emphasize where that is. Pull it up, click, pull it up. And the resistance, which can be found in here, and the recent one, which is the most relevant one for us, is 462, which was there yesterday. Intending to go up, by the way, which gives the candle the shape of a reversed hammer with head facing down. Now, if for instance, I believe that's, we're going to click here on buy or sell to reset to the right menu. And if I click on sell and adjust the lot size 0.01, and if I believe that corn has still a way down to go, we're going to click on the take profit This time we're going to set a value which is lower than the price. Lower than the price. As we said, in a buy scenario, our intention is that the value will increase. And in a sell scenario, our intention is that the value will decrease. In this case, our loss area will be higher and the take profit will be lower. This time I can look at the current price, which is 448, and I can see that the support line is $6 down. I think I'm going to take a value a little higher than that, which can be $5 higher, $1 higher. So if I plan to sell for maybe we'll make it a flat 450. I think we'll let it go up a little bit before we sell, so we can gain some difference in here. And then we're going to target $5 down, which comes down to 445. And the stop loss can have the same difference. So from 450 to 455, it will turn 450 to 455. And then we can look at the same ratio. And I think we're going to click on the rectangle and place it where it belongs. And also this can be 45 now. Okay, and the loss area as well, we're going to adjust it. So from 450 to 455. Great. And now again, we're looking at the same ratio, which we are going to work on. We'll paint it in red. We're also going to adjust the lot size to make 500 and not 5, which in this case, we can again use the same technique we used before with soybean. So we're going to click here on the target is 500. We see target divided by movement. So we're going to go 500 divided by price difference. We said that it's 5. Okay, and we are also going to confirm it with the ATR the same way we did with a soybean. In this case, just a second. In this case, we're going to look at the ATR, and the ATR is even better, 6.6. So we selected 5, and that's not bad at all. So it's in our range. And the ATR here, we're going to write 6.6. Okay, great. And the units necessary for that is 500 divided by 5, which comes down to 100. We don't need a calculator for that, right, guys? And then we've got both take profit and stop loss, 445, 440, and entry 450. Excellent. Great. And great, okay. We've got discovered. So we've got all of this position. Scalping doesn't really give us anything at the moment. We'll stick with intraday and swing. And let's look at Tesla. Tesla, we're going to click the corner we've got here, place Tesla, select it from the list. And to display the right menu, we're going to click on buy or sell. Let's go this time with a buy. Okay, so if we're looking at Tesla, we're looking at the days. It seems like Tesla is very, very dynamic, which climbed 20, let's see, place a trend line here. So this is 29%, and this is 40%, just insane. Changes that we've got with Tesla. So let's suppose that let's change quickly to weeks and just one more time for months. Okay, and we can see that the general trend for Tesla has been quite bullish, right? And we might expect Tesla to rise again. So let's suppose that I'm a big fan of Tesla and I think that I can buy now, hoping Tesla will go even higher. Okay, and in this case, what I want to do is I want to maybe keep it like this with 15 shares, hoping to make 500. Okay, and in this case, when Tesla is at 276, I aim for Tesla to go even higher. Let's say around, let's not go too crazy. Let's say $30. I think it's reasonable. Let's switch back to weeks. Okay, and I think $30 is reasonable. Again, if we place the take profit $30 away with 15 shares, we're going to see in a moment what that's going to be. We'll also describe a profit and a loss ratio. Of course, we're not going to be able to take the position until the market will be opened. And in this case, we've got two points in here. Okay, maybe we'll make it a little lower. No, I think that's enough. That seems reasonable. So the entry in here will be 275. In here, take profit is going to be 305, and stop loss 245, which leads us to, let's quickly, oh, sorry, I should have done this at the bottom and not on corn. Sorry, let's make it right here. We've got entry 275, take profit is 305, stop loss 245, and then we've got, in a moment we're going to adjust it to make sense, 500 stay target. Well, now the time is not going to be 1 day. I don't think it's going to move $30 in a day. We see it's much lower than that. The ATR displaying 10. But if I switch to weeks, it's more reasonable. So I think in a week it might get there. So I'm going to put a range of 1 week to 2 weeks, since we don't know if it will go directly there or consolidate. And in the ATR, we're going to place 40 as it's written in here. And then we've got 40 versus the price we're looking for, which is $30 away. And in the units, we've got 15. We cannot change that since the market is closed, right? So we got to work with what we've got. And 15 times 30 is, let's see. So it doesn't get us to 500, but I think 4.5 is not bad. Okay. And we've got 3 positions, one for 1 day, one for a little more than a day, 2-3 days, and another one for 1 or 2 weeks. So how this connects is very simple. All these positions can be kept simultaneously in my account. I can choose to open each of them whenever I want, at whatever price I want that is available on the chart. And what this allows me to do is it allows me to balance my general profit, expected profit, to expected loss. And we can see that the best case scenario here is that we will make 500 times 3, it's 1,500. Worst case scenario here is that we can lose 1,500. But if we modify and adjust the ratio in between and turn those 500, 500 to 500 to 50 or 500, this also should look like that. No, that is where we need. And again, there we go. So we've got 5, 5, 5, 5, and 4.5, 4.5. Great. Okay. There we go. So we're missing 100. This is how it should look like. Oh, we're missing 50. There we go. And now we can adjust the ratio to what makes sense to us. We can adjust the ratio between take profit and stop loss to adjust the best and the worst case scenario to have a better result. All right, this is a nice, fun way to show you how to combine different trading style to a hybrid strategy. Of course, there are thousands of different strategies which we can implement in our own way, but I showed you one of them, hoping that this procedural technique can help you make your own good strategy. And we are just going to write down the notes that we've got here in our presentation, and we'll make it a bit smaller also. And in a few minutes that we've got left, just a second, we'll make it smaller to fit to the presentation. There we go. No. Okay. All right. It's a bit difficult to make it work. Maybe now. Yeah, like I said, you guys can review this webinar whenever you want in our YouTube channel and recap it again if you want to see this part again, which might be a bit too swift. I'm going to send you some links here, guys. Okay, so we've got the first link for additional education. I'll paste it in the chat. We've got a second link to log in and make a deposit. We've got the FAQ and the Help Center for more official questions maybe, and a real account to if you are still with a demo and you want to really practice in the real with a real account. So this is how you can do it. And lastly, the last link that I added was to get to the Academy, but I'm going to show you very quickly how you can access that from the website without doing anything. So if we look back at the website, we can see that the default interfaces we saw in the beginning is looking like that. Maybe like this. And at the bottom left area, right underneath all those icons here, we've got the chat, and above the chat, we got the videos and tutorials. So in here, we can click and get to the Academy. And in here, we can click and get live tutorials, which can assist us moving forward to learn about different topics, platform review, trading basics, stock market fundamentals, trading knowledge, and so much more, which you guys can enjoy. The last thing that I'm going to give you is a live Q&A benefit for you guys to enjoy one-on-one premium market review with your senior account manager, which I will paste in the chat. So you can keep this code, give it to your senior account manager, and you can receive one-on-one premium market review. Unfortunately, our time for today is up. So until next time, I wish you all best of luck with trading. Have a fruitful week. Come join us next time and have a good day.